Are you thinking about taking out a personal loan, and you went straight to Capital One because you already have their credit card in your wallet, or you see their commercials on television every single day? You ask yourself, does Capital One offer personal loans? I am going to give you the direct answer right now, but more importantly, I need you to understand what taking on debt means for you at this exact stage of your life. The straightforward answer is no. Capital One does not directly issue standalone personal loans under the Capital One name. While they acquired Discover, which does offer personal loans, Capital One itself stopped offering traditional personal loans years ago. So if you go to a Capital One branch or search their core online portal expecting to apply for a standard unsecured personal loan, you are not going to find one directly from them. Now, I want you to stop right there and take a deep breath, because I care about you, and I want you to protect what you have worked your entire life to build. The real question is not just whether Capital One offers personal loans. The real question you must answer right now is, why are you looking for a personal loan when you are retired or about to retire? I know what is happening out there. I know inflation has squeezed your monthly budget. I know medical bills can show up out of nowhere. I know home repairs do not wait until it is convenient for your bank account. And I know the deep, terrifying fear that strikes when you look at your fixed income, your Social Security, your pension, your retirement savings, and you feel like you do not have enough cash sitting there to handle a sudden expense or pay down high-interest credit cards. That fear is real. But taking out a personal loan when you are on a fixed income can very easily turn a temporary financial squeeze into a permanent financial disaster if you are not careful. When you are working, you have future paychecks coming in. If you make a mistake with debt, you can work extra hours, ask for a raise, or switch jobs. But when you are retired or approaching retirement, your income is fixed or drawdown dependent. Every single dollar that goes toward paying interest on a personal loan is a dollar taken directly away from your food, your prescription medications, your shelter, and your peace of mind. So let us break down what you need to do right now, step by step, to address the underlying problem without putting your financial safety at risk. First, identify exactly why you think you need this loan. If you are looking for a personal loan to consolidate high-interest credit card debt, I understand the desire to combine 4 or 5 monthly payments into one single lower monthly payment. But a personal loan only works if you fix the spending habit or the budget leak that created the credit card debt in the first place. If you take out a loan to pay off your credit cards, and then 6 months later you start charging those credit cards up again, you have now doubled your debt. You will have the personal loan payment and new credit card payments, and that is how retirees end up in bankruptcy. Stand in your truth about why that debt exists before you sign anything. Second, if you truly have an unavoidable emergency expense or a high-interest debt that must be restructured, do not limit yourself to giant commercial banks. Look closely at local credit unions. Credit unions are nonprofit financial institutions owned by their members, which means their mandate is to serve you, not to maximize corporate profits for shareholders. Federal credit unions have statutory caps on the interest rates they can charge on personal loans, which often makes them significantly cheaper than big online lenders or national banks. Furthermore, credit unions tend to take a much more personal look at your overall financial picture, especially if you have been a long-time member. Third, explore a 0% interest balance transfer credit card only if you are disciplined and have a clear repayment plan. If your credit score is solid and you are trying to wipe out existing credit card debt, shifting that balance to a card offering 0% APR for 15 to 21 months can save you thousands of dollars in interest. But listen to me carefully, you must calculate the exact monthly amount required to pay off that entire balance before the promotional period ends. If you fail to pay it off in time, the interest rate will jump back up, and you will be right back where you started. Fourth, examine your emergency savings before you touch any loan product. I know it hurts to pull money out of a high-yield savings account or an emergency fund that you worked so hard to build. It feels safe to keep that money untouched and borrow someone else's money instead. But borrowing money at 8, 10, or 12% interest while your savings sits there earning 4% is losing you money every single month. Your emergency fund exists precisely for emergencies. Use your own money first to avoid paying interest to a financial institution. Fifth, check on your home equity with extreme caution. If you own your home outright or have significant equity, people might tell you to take out a home equity line of credit or a home equity loan. While interest rates on home equity loans are often lower than personal loans because they are backed by your house, you are putting your roof over your head on the line. Never, ever secure an unsecured debt, like credit cards or personal expenses, with your primary residence. Your home is your sanctuary in retirement. Do not gamble with the place you live. Finally, I need to say something to those of you who are looking for a personal loan not for yourselves, but to help an adult child or a grandchild. I see this happen every single day, and it breaks my heart. You want to help them buy a car, pay off their student loans, or pull them out of a financial hole, so you take out a loan in your own name or co-sign for them. I am telling you right now, do not do it. You cannot afford to take on debt for someone else when you do not have a way to generate new income. You must put your own financial oxygen mask on first. The greatest gift you can give your children is your own financial independence so that you never become a burden to them later in life. You deserve security, clarity, and freedom from financial anxiety during your golden years. Do not rush into a loan just because a brand name is familiar.